Welcome to today's 24-hour global financial update. First, Trump has canceled the proposed doubling of tariffs on Canadian steel and aluminum products. On Tuesday, March 11th, Trump threatened to raise the tariff rate on Canadian steel and aluminum products from 25% to 50% in response to Canada's 25% retaliatory tariff on electricity exports to the U.S. After about 6 hours of back and forth, Canada suspended the electricity surcharge, and the U.S. canceled the doubling of the tariffs, although the original 25% tariff will still take effect at midnight on Wednesday. The U.S., Canada, and Mexico will discuss amendments to the USMCA before April 2nd. With the U.S. relying on Canada for 60% of its oil, 85% of its electricity, 99% of its natural gas, and 85% of its potash imports, the market expects the conflict to be difficult to escalate further. If Canada takes further retaliatory measures, it could raise U.S. inflation expectations. The current focus is gradually shifting towards the Federal Reserve's monetary policy direction. Next, Ukraine has accepted the U.S. proposal for a 30-day temporary ceasefire. U.S. and Ukrainian officials reached a consensus in Saudi Arabia, with Ukraine agreeing to a 30-day ceasefire with Russia. The U.S. will restore intelligence sharing and security assistance to Ukraine and sign a critical mineral development agreement. The Russian Foreign Ministry stated that it does not rule out communication with the U.S. in the coming days, but insists on opposing NATO troops in Ukraine, and the framework for a peace agreement remains distant. Seven's report research noted that if the conflict ends early and sanctions on Russian energy are lifted, global oil supply could surge, putting downward pressure on oil prices. JP Morgan suggests investors take advantage of low prices to buy U.S. stocks. JP Morgan asset management strategist David Lebovitz stated that although the probability of a recession in the U.S. has risen from 15% to 20% within a year, the fundamental data remains robust. He recommends that investors gradually position themselves after the S&P 500 drops below 5,500 points. However, with unclear signals from the Federal Reserve regarding interest rate cuts and rising tariff risks, market de-risking operations may continue, and U.S. stocks may maintain a volatile downward trend. Finally, the German Green Party plans to raise the threshold for defense spending exemptions. The Green Party has proposed increasing the threshold for exempting defense spending from debt rules from 1% of GDP to 1.5%, which differs from the plan of incoming Chancellor Merz. Both sides are expected to reach an agreement before the weekend, and the market anticipates that large-scale fiscal stimulus may raise inflation expectations and government bond yields, thus changing Germany's economic outlook. The decline in U.S. stocks has slowed, and safe haven assets have rebounded. The three major U.S. stock indices closed at a 6-month low, but with narrower declines. The Nasdaq fell 0.18%, while Tesla rebounded nearly 4%. The VIX Fear Index has retreated from a 7-month high. In the currency market, the dollar index fell 0.47% to 103.42, and the USDED touched a 1-week high due to trade war fluctuations, while the EUS rose 0.7% to a 4-month high. In cryptocurrency, Bitcoin rebounded over $6,000 after dipping below $77,000, currently reported at $83,000. In commodities, spot gold rose 9% to surpass $2,920. WTI crude oil rebounded after testing the support at 65.5. Today's outlook includes the U.S. February CPI data to be released at 23:30 AEST. The market expects the CPI year-on-year rate to drop from 3% to 2.9%, and the core CPI year-on-year rate to drop from 3.3% to 3.2%. If inflation slows as expected, expectations for rate cuts from the Federal Reserve may rise, putting downward pressure on the dollar. Conversely, if the data exceeds expectations, concerns about sticky inflation may intensify, further pressuring U.S. stocks. Additionally, at 0:45 AEST, the Bank of Canada will announce its interest rate decision, with the market generally expecting a 25 basis point rate cut. Given the tariff risks between the U.S. and Canada, this move is seen as a precautionary measure.